wanted to make a video update on some of my portfolios. As I've been noticing, the stock market has been continually rising up, and the cryptocurrency market has been coming down a little bit. Um, and some might think that one is influenced the other. I think in this particular case, it isn't. The stock market's still kind of running off like what I would call kind of like the Trump bull market, the faith in the tax cuts and everything like that, like benefiting the market and being able to move money around the world for a lot cheaper and having only 20% corporate rate and so on and so forth. So in my portfolio, Internet Titans up about 20%, and I'm still waiting because I emailed Stash, and they said they were working on doing a money weighted and a time weighted scale. So money weighted is basically kind of what they're doing now, where every time I put in money and add this, it affects my percent. My percent goes down because it's averaging it. And I wanted them to do the time weighted or have an option for time weighted, so you can see from day one since you held this account or this ETF like how much it's grown. And they said they were going to add that in at some point, and I hope it's soon because I'd like to see, because all of these, if I did that, like Internet Titans would be like at 30 to 40, Defending America 30 to 40, Raw Earth would be 20 to 30s, Money Machines 20 to 30s, they'd be a lot higher because they'd go from the start date when I started investing. So it's a good way to kind of see, or I should say it's a different way to look at your investments and how you're progressing in them. And I like having that aspect. So I hope to do that soon. But anyway, sidetrack. So Internet Titans about 20%. Internet stocks keep going up. Defending America at 26%, keep going up. Every time there's a threat of war of some kind somewhere, doesn't matter. It's going to always benefit. Raw Earth oil stocks, man, I know I talked about this in the last video, but looking at this, oil is just on a damn run up. It's ridiculous. It is like you look at it on the RSI, it is way overbought. There's so much influence for oil right now, and I haven't been looking too much in it. Um, I'm sure I could easily look it up and figure it out real quick, but I just don't feel like doing it right now. Because like I said, I'm investing in these ETFs for the long term, so I'm not worried about the day-to-day moves. I'm just watching it for long term. But every time there's a good dip, though, on this chart, we'll see like on the 50-day where it comes down to like right here, then I would be buying it, just adding to my position. But if you just look at this, like look at the RSI, it's ridiculous. It is so high. Look at all that damn green. Look at this on the chart, just running up, 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 and then it looks like it started to plateau right here, and then now it's just continuing up to the next leg. Even on the MACD, it's just ridiculous how it's running up. But anyway, it's just interesting. I did not expect oil to have this much of a run up for sure, and I would have thought it would have stayed kind of with this trend a little bit, but apparently not. It's going strong. Um, and then, of course, Live Long and Prosper, Central Europe, doing good at 4.81. And these last three, of course, are the ones I added for this year, 2018. So they're still new. Robots Rising at 6.2. That one's right. This Robots Rising is rising fast for sure. Um, I know in a 12-year, yeah, it's at 47%. So it's pretty good, and it's already given me some returns, which is nice. And then social media, stupid little ad. There we go. Social media, just about 3%. So already these ones are kind of kicking in nicely, which is good. I'm sure there'll be a pullback at some point, and I think I'll add a little more because I want to get these to about $100. As you can see, at Central Europe, I've invested 100, and then Robots Rising, I got 50, and social media 50. So I want to do another 50 on both of these at some point. Get them just to about $100, and that's like a good base. Like I'm trying to do for each ETF, get at 100, and then once I see good dip opportunities in the market, I'll just slowly add to my position. And if you look at Internet Titans, you see I've invested about 290, but I have 345 in value, because I have about a 20% run up. So investing or Defending America, I got 190 and I have 240, total with a 26, almost 27% return. So like buying those good dip opportunities is like the best way to go. And it's hard to time it, but the best way, like I always say, is like StockCharts.com. It's a free website. It pays nothing, and it already when you type in a ticker symbol, it already populates the RSI, candlestick chart, the 50-day moving average, the 200-day moving average, and the MACD. So it gives you like good a good foundation of daily information that you can look at when you follow stocks or weekly, however often you look at them. But it's just a real easy way. And like I said, I just buy these dips. I identify the trend, and the trend is bullish on the 50-day because it's staying above the 50-day moving average. So every time it comes down and touches the 50-day, I buy it, and then I let it run up, do its thing. It comes down, touches again, I buy it. It runs up, does its thing. It comes down again. Same thing. But if it touches and I buy it and it breaks down and keeps going, I wait for it to find kind of like a bottom, and then when it starts coming back up a little bit, I'll buy it there, so I'll get it at an even lower level. So the lower I can get it, the closer I can get to that bottom, the better. I'll never catch the bottom, just like I'll sell at the top, but like just as close as I can get to those levels as possible. But anyway, um, and yeah, so far I'm at 17.9%, almost 18%. These robots rising and social media have really influenced my portfolio in terms of the total return here, which is nice. Um, like I said, I'm tech heavy in this portfolio now. Originally, I just had Internet Titans, which was my only tech stocks. Then everything else was different because I wanted, to show everybody, but um, having a diversified portfolio has more or outweighs the benefits, at least in my opinion, than a 100% tech or 100% defense or 100% banks. Because you take all the punches. When you invest fully into that one stock. Yeah, you get a bigger rise out of it because you're going all in, but you also take a bigger fall. So just like having it spread out like this is nice. So and adding a little bit of tech is influencing it. And if these tech stocks go down, of course, this percentage number is going to go down kind of quickly. So I do have, like four or five other ETFs in different sectors. So it's spread out kind of nice, but I just got to keep that in mind that when I see this total return coming up quickly, it's only due to just these two ETFs just barely getting some ground or gaining some ground. But overall, still tech and defense are my best too. So like I said, if you all can't get these in your portfolio, try going through and redoing the questions that they ask you when you first set it up to test your risk tolerance and give some different answers. I would highly advise having tech and defense in your portfolio. They've done the best for me so far. And then on to cryptocurrencies. So I'm just looking at my main ones, my main four that I'm really interested in. Um, the market the cryptocurrency market basically seems like it had a run up and a drop back, and people are trying to understand what's the drop back because the beginning of the year here you see about 0103, 0104, so January 3rd, 4th, around that area, it really ran up. And I bought January 1st, I believe, is when I first bought these. So I really caught that run up, but now it's already dropping back and it's coming close to my original prices or just a little bit below. So I added to my position. So I'm averaging about the same price where I bought in, and I added in some more. And the reason why that I've been researching and looking into it is coinmarketcap.com, which is like the largest or I should say the most popular website for researching any altcoin or Bitcoin or cryptocurrency. I guess they originally had these prices pegged to a Korean or the Korean exchange or a Korean exchange, and that exchange came at a premium, so all the prices were a little bit higher. For instance, Ripple, when I bought it, it was about $2, but on this website, it was like maybe 230, 240 because it was going off of another exchange at that premium. So recently, CoinMarketCap, I guess without really telling people, at least that's what it seems like, kind of pulled the plug on that, and they now have the prices averaged at kind of what the general market is at, not at the premium. So now it's kind of at the level um, that it's supposed to be at. In my opinion, it shouldn't be at a premium. It should be at the more common general level that all the other exchanges are seeing it at. So what do people do? They panic sold, right? That's like with anything. It's just like the stock market. When something happens, people get scared, they panic sell. So all those people that panic sold, I just bought up your coins. So thank you. I like I'm in this till 2019. I have I have my set money in stash. I have my set money in my day trading. I have my set money in Coinbase, and now I got my set money in Binance. I specifically made this portfolio for just the money. Whatever happens to this money, if I lose it, that's gonna suck. But like I say in my other videos, I don't put in more than I can afford to lose. I can still pay my rent, I can still pay my bills, I can still, go out and eat, I can still do things. So just keeping that in mind, like I have 4 portfolios kind of active now that I'm all working on, and each one serves its purpose. But I'm trying to get people involved in this one to give them more of a diversified portfolio. So having stock market, cryptocurrency market, if you want to do the forex market, if you want to do commodities market, whatever. But yeah, that's the reason why a lot of these cryptocurrencies look like they're pulling back. Now I don't know when it's going to plane out and kind of relax a little bit, but like I said, I took advantage of the fear in the market and I bought more, so bought more coins. So and like I said, this is till 2019. I'm going to be just on this. These will be my investments, and I have 6 here. IOTA and BNB, and BNB is just the Binance coin itself, for the exchange, and IOTA, which is the whole Tangle technology, which I still don't fully understand. I'm trying to learn more and more about it, but I'm interested in it. But I consider XRP, which is Ripple, ADA, which is Cardano, XVG, which is Verge, and TRX, which is Tron, kind of um, my main 4 that I'm looking at, because I like Tron because the founder behind it, Justin Sun, has been on the Forbes list twice for 30 under 30. So I think that Forbes Asia Pacific, I think was the first one, or maybe just Forbes Asia, I don't know what it's called specifically, and then just the general Forbes list for like the worldwide. So he got on there twice, which is fantastic. So as much as people would like to think getting on there once is a fluke, which is not because that's impossible, getting on there twice is an extreme, extreme show of like determination, which I really like. And his mentor is Jack Ma, who created Alibaba, which is one of the biggest companies on the planet. Like a lot of people may not have heard about it because it's from China, but like anywhere over in Asia and any of the countries nearby, a lot of tech companies over here. It's a big competitor to Amazon in a sense, but they also have a few other things that Alibaba does. But it's just such a big company. I believe I heard that they control like 65% of trade, or like online trade or something like that. So they're just a really big entity. It's a gigantic company. But the guy that created that company, Jack Ma, basically mentored Justin Sun, and that's his only disciple. Like he hasn't had anyone else. He hasn't trained anyone else. So like it's a really tight partnership and relationship, and that's just even more interesting to me. And the team they developed is good. The guy's very active on Twitter. Like he responds to questions, he answers questions, he does live streaming for people. He talks about the progress of the company. He's very involved. So you can follow this guy literally on a day to day, sometimes even hour to hour basis because he's so consistent. I like seeing that in a CEO running the company. I like showing that, or I like seeing that they show to the people, like we're being fully transparent. I like those aspects. And then Ripple, I see Ripple as like kind of like Bitcoin's kryptonite in a sense, because it's the opposite, where Bitcoin is like private, secure, global transaction, like open to anybody, open source kind of. Ripple is more, or I mean, not open source. It's private. Ripple's open source and it's more centralized, but the purpose is to facilitate transactions between worldwide or world banks or banks in general, because it costs, like, I don't know if you've ever done a money transfer. I don't know if you've ever tried to send money to somewhere else. Like a lot of people worldwide, I believe the number's like 500 or 600 billion. The people send about 500 or 600 billion dollars back to their home countries, and they pay a lot of fees on that. It's slow. Sometimes transferring from like the U.S. dollar to pesos, or Chinese yuan to Japanese yen. Like all the transfer fees for that. It's very costly and expensive. So Ripple's kind of trying to facilitate that in a way where it's mainly for banks though, like from one bank to another. But that transfer, it'll be a lot faster within seconds, and the fees will be extremely lowered. So in turn, as customers like myself that want to use my bank for purposes like that, I'll be saving money. So there's a huge benefit to that. And like I said, it's a huge. We're talking trillions of dollars probably overall that are involved in what and are involved in how this coin can help basically transfer that wealth around the world. But just as an example, that 5 to 600 billion just from people sending home back to their families, that right there is like a huge, huge amount of money that Ripple is going to be able to, or they can facilitate and make give better profits to the people, and actually have people keep more money. So instead of sending $100 going through the normal way, and $10 to $15 of it is like within tax and fees and all that, you can send that $100, and the person on the other end gets it. They'll get $99.50. You get like almost all of your money versus losing $10. Would you rather lose 50 cents or $10? Right? There's a huge difference in that, especially when you're giving it to your family at another country where every dollar counts. Like $5 is like groceries for like a week. Like that really makes a difference. But I think that coin is interesting, and I know people don't like it because it's like anti-Bitcoin or whatever, but it still serves a great purpose, and that's why I'm investing in these specific coins because of what they can do. Um, and then Cardano, which is ADA. Basically, it's at least as I see it, the evolution of the kind of like Internet 3.0, I guess, because we've been on Internet 2.0, which is like social media based and sending videos and information. But this will be the next stage, and it'll be decentralized. It's an evolution from Ethereum because the creator of the company was the former CEO of Ethereum. And if you guys are in the cryptocurrency space at all, Bitcoin number one, Ethereum number two. Those are like the main two that people know. So he's got a lot of experience in it already, and he's finding ways to basically join together all these um, other dApps that these companies that people are creating that are decentralized to run on this platform and basically make it more smoothly. So he's trying to make, in a sense, like the iTunes Play Store or the Google Play Store, but for this decentralized kind of space that's being created. So it's like right now, like you can't get Google apps all over the world. You can't get iTunes apps all over the world, because certain countries won't allow the services come in, or Apple or Google hasn't, reached out to those countries to give people the opportunity to download these apps and stuff. But these decentralized platform like Cardano, anyone, anywhere can have access to any of these apps that will be created on the platform. So down the road, and I mean a long ways down the road, when this technology becomes more mainstream, it's going to be huge, like years. And then the last one, Verge, which, and I've said in the past already, I don't particularly like privacy coins. I don't see utility in it as an American because I like have protection. I don't need to like hide from anybody. I'm not saying like you're a bad person if you need to hide from somebody. Like some people live in countries where it's really bad and scary for them, and they do hide for a legitimate reason. But like I said, I'm in America, so I'm okay. I'm safe. But like I recognize that there are parts of the world where governments, like come after you for your money or your property or whatever, and it's a corrupt system, and they need some way to be private and anonymous. So I recognize that parts of the world, like where I live in, I'm fine, but there's other parts in the world where there's still billions of people that could use this technology. So, and I basically chose Verge because Monero and Dash are so popular and so high up. I'm trying to buy more coins at once, banking on the fact that the price of the value of the coin is going to go up, and the technology behind Verge, from what I've seen at least, is fine. It's solid. I understand it. What I don't understand is ultimately what's going to be the privacy coin that's the best, because I feel like there's a lot, and I think Monero is used the most on the black market because just its security is like its security is preferred, and I think Dash is more like mainstreamed. So I'm hoping Verge has some additional things that maybe those currencies don't have that can bring it up. And then IOTA, with the technology of basically going away from the blockchain um, into like the Tango web, which they call. I'm still looking more into that, but I'm interested. I have a smaller position in that. And then the BNB, which is the Binance coin, again, just buying the exchange. I'm just basically going to profit from people paying fees like myself, that's adding value to that coin over time. So just to get a little bit of money, but in a way, get a little bit of my money back from all these fees. But that's kind of where I'm at. So like I said, stock market running up, everything's looking nice. Cryptocurrency market coming down just off that FUD or that FOMO, that fear. They're trying to pull out all their money just because they're afraid that something bad's happening. And uh, like, I don't think a lot of people have a good concept when trading, especially in cryptocurrency, that bad things are going to happen. The market's going to fluctuate. That's completely normal. That's literally every day of the week. If the market did just keep going up ridiculous, like then it'd be something something to be worried about. Like oil right now, like I showed you on that chart, like this is not sustainable. I'll bring it back up. Um, that rise is not sustainable. It's insane, and especially for a commodity like oil. Like I can understand the value of it and the price of it can fluctuate because it's worldwide. Oil is sold worldwide to fuel everyone's economy basically. But to see it run like this and be so overbought, and people probably at some point as this is going up, 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 getting to the point like, oh my God, I gotta buy it, and it just goes up, up a little more. But the crack or the correction that's gonna come off of this is gonna go lower than where they bought in at because they bought on the run up, they bought on the hype. So try not to do that. Like I said, identify the trend, which again, like I said, in this case, it's bullish on the 50-day because it's simply above the 50-day. So I'm watching for the bounces. It hits bounce here, I bought some. It kind of comes up, it hit bounce right here, I bought some. I haven't touched it. I haven't not touched it since all this run up. I have literally done nothing. I'm just sitting back and watching it. And then when it comes back down low again, it touches that line, I'm gonna buy some more. And even if it goes lower than that line, I'm going to watch it, wait for it to kind of go sideways, consolidate. And when it starts coming back up, I'm going to buy it. And I guarantee it's going to be below this line. So I'm going to get a much lower entry point as it continues upward. So that patience, just people just have to have patience. That's the hardest thing to learn when you're trading. It's the fucking hardest thing to learn. I think you can learn every strategy under the sun and it wouldn't matter. If you don't got patience, you're just going to fail. So that's why like when I first bought in this hype up on all these currencies, this run up, I didn't buy at the top. I didn't buy as it kept going up. I bought it at my position and now I'm waiting. And then it came down for a little bit, came down for a little bit, came down for a little, and it got right about to where I entered at. And then I bought a little more. And then it run up, came down, run up, came down. I'm just watching it going sideways, consolidating. And then when it starts maybe on a little bit of a run up again, and it looks like it's breaking past these levels, these highs, so I might add a little more to my position and then just get the next ride up. So just keep that in mind. A lot of people, man, I worry about a lot of people wasting money, not being patient. And I hope with these videos, like I keep saying, you watch my mistakes, then you go, oh, he was stupid. I'm not going to do that. I'm not going to make the same mistake he did. I'm going to do better. That's the whole point. I show my successes and my mistakes. I try to do the best I can. Um, but going forward, just keep that in mind. Just don't don't get that FOMO feeling where you fear you're missing out on something, and really it's just a normal fluctuation in the market. But anyway, so that's really all I got. I just want to do an update. I'm still waiting till pretty much the end of the month, and I'll start my day trading videos up again. So, like I said, I've just been taking a break, been kicking back off that, and I'm learning basically cryptocurrencies, and I'm getting involved. So, anyways, hope y'all enjoyed the video. And as always, have a good day.